Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody. Today guys, I would like to take a look at the Japanese yen because in general the situation here has a very significant potential of the possible action, and that's why I do not want to abandon it just because we mostly speak about the euro currency. Well, since we have talked about the euro currency in the weekend, it's really currently doesn't demand any update in situation on the euro currency, and that's why probably we could take a look at the Japanese yen and just to see what is going on right now and how our retracement stands that we have discussed on previous week. So we said that market on the daily chart has very significant potential, moving right to the 106.60 area, that is 127 extension of this butterfly. At the same time, on the monthly chart, we have the bullish stop grabber pattern that has invalidation point right here, at the same point as the butterfly is. So the major invalidation point of the long-term perspective of the long-term bullish setup stands right here. This is also in the June. This is also the monthly pivot support one. So if market will return right back down, take out of these lows and that lows, that will mean that market will totally erase the bullish setup on the Japanese yen, and we in this case we will have to be ready for more yen appreciation in relation to the US dollar. But meantime, since there's too far distance to this area, we will be focused mostly on that level, that's monthly pivot point, and but not on only the pivot point, since our major suggestion is that market has started to move up and has hit the significant resistance right here. So that's the monthly pivot resistance one, this brown line. And take a look, that is the 618 resistance, 102.86. 618 resistance from that high to this low, so the 618 level. So that's why it's logical to suggest that market could show some respect of this resistance and show the retracement down. But this is not just a resistance. So if we take a look at the 4-hour chart, we will see that that is also an agreement with this ABC bottom D pattern that we have traded previously. So that is ABCD pattern that creates an agreement with this level. That's increase the power of the resistance and should trigger the retracement right back down. Okay, that what we have said in the previous week, and you can see that the first leg of the retracement has been completed. Market has shown the fast bounce up on the payrolls release, and now is turning to the downside again. Take a look at the market right now stands below the weekly pivot point. On the previous week we said that the most reliable level of support of this first stop stands around the confluence area. So that is 101.94, 102.04 area. That is the confluence support. That is accompanied by the weekly pivot support one, natural support resistance area. So you can see that was previous swing up, resistance, retracement down. So that will be the support. And take a look, guys, on the daily time frame chart, monthly pivot point 101.86. 101.86 stands slightly lower than the weekly pivot support one, so that will be really significant support cluster, and that will be also an agreement if market will accomplish this ABC top D pattern. So that's our primary area to watch for a potential bullish pattern and entry on the long side of the market, because guys, if even we will become wrong, I have said this million of times about that I prefer to have the very strong support area on my back when I'm trying to take the long position, because if even I will become wrong and market after some time will break this area and turn to the downside, and even if it will vanish all the bullish setup here on the monthly time frame chart, at the first touch of this area, market probably, at least the chances, the odds suggest that market should show the respect of this support by some bounce. And particularly this bounce out from this support area at the first touch will let me to move my stop at the break even. So when the market take it, I take the position, market bounce up as a respect, I move my stop to the break even. So if it will return right back down and break to the downside, well, I will lose nothing. Okay? And if market will continue move to the upside, well, that's great. That's what I would like to get. So that's why the having of the significant support there on your back when you're trying to take the long position is very huge advantage that we should not ignore. That's very significant. So right now we will be watching for this move to the downside. But in this probable motion to the downside, we have a lot of nuances. So if you take a look at the hourly chart, what do we have? So consider multiple patterns. It looks a bit complicated, but we will go in through it step by step. First of all, take a look at this A purple line, A, B, C top. That's the same ABCD down that we have on this 4-hour chart. Okay, trend is bearish here, and on the hourly time frame chart as well. So here we have the minor extension of this pattern that market just has hit. So 618 extension of this area. Okay. Also, guys, here we have the non-farm payrolls upward candle. It's very significant and huge candle. We could call it even a more robust candle. And such candles has very significant support point at the bottom. So that's in fact very significant support that creates by this candle, and it coincides with the 618 area. So what I would like to say is that theoretically, guys, if you will contract this chart, you'll see that market easily could shift to the bottom line, right? If it will hold here, it could turn to the bottom line and start to form the right wing and continue move to the upside. It really could happen. That's why this level is very significant and extremely important, because if market will take out of these lows, it simultaneously will erase this upward candle that currently holds the all following price action inside of this range. And that probably will be the great challenge on destruction of the possibility of the pairing butterfly. So although the invalidation point of the butterfly stands right here, but that is the major point to watch for, because if market will move below the 618 target, it simultaneously will appear in a semi-position between the 618 and 100% extension, and in fact it will have no choice just to continue move to the 100% extension of this ABCD simultaneously. If market will erase this huge candle, you know what usually happens when the market erases the significant bullish candles. So when it move down, 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 take out of these lows, after that market usually shows the acceleration to the downside. That's why I think that the taking of these lows will open the road right to this area, right to the level that we intend to use for possible taking the long positions, around 101.95, 102.04 area, so right here. Okay, that's why the first task of our trading plan today is watching for this low. So market should take it out. What else? Here, guys, second pattern that I would like to discuss is the butterfly buy that is forming here. Okay, and take a look that 127 extension of this pattern stands precisely 101.97, precisely in an area of the confidence support. Okay, as well as the 1618. 1618 stands around 101.80 probably. But 127 stands right in the confidence support, and that could become the pattern that could trigger the upward action. Okay. Finally, guys, I also draw this minor ABC top. Here I just would like to show that market has passed through the 100% extension, and the next target will stand right here. It's 1618. So chances, in fact, not very bad, not very small, that market really could continue to move down. Especially because market already has vanished the most part of this candle. Just taking out of these lows could lead to the downward continuation. So that's all that I would like to say about the Japanese yen. The situation is still interesting. In the nearest hours, we should be focused on the two moments. The first moment is the taking out of these lows, that is marked by the red circle and passing from the minor 618 extensions around 102.25 area. And the second, as market and if market will accelerate down, Watch for the confidence support and the possible taking of a long position here. That will be our entry point for possessing our sales with this probable big butterfly to the upside.